Hello, welcome everyone to No FOMO Charts, Stocks and Crypto Technical Analysis live stream. Today is January 17th, 2022. It is about 9 o'clock p.m. Eastern Standard Time. Let's get right to it. Stock market earnings season begins tomorrow, Tuesday, officially, and we're going to be focusing more on stocks the first half of these streams moving forward for about a month, and then we're going to go into crypto in the second half. I'm going to do 1 hour and then have a hard stop at 1 hour. So please remember, this is an educational TA live stream. This is not financial advice. Let's jump right into it. Dow Jones, DIA. Why do we look at this? Because it's the Dow Jones Industrial Average ETF that's actually tradable on the stock market in the US. Okay, so here's what we need to know about stock market earnings season. Earnings, financial reports, and fundamental news in stocks can override, can supersede, is more important than a technical analysis chart. Okay, so once we're in stock market earnings season, my mindset changes, okay? It becomes more about what is the corporate release, the financial report, what is the fundamental news, what are the announcements that the company is making on the earnings call, those types of information, okay? It's not about what is the RSI telling me at this 1 minute in time, okay? So that's what we have to understand. So with that in mind, we're still in the daily uptrend of the Dow Jones Industrial Average Index. Okay, if you just look at the price, this is different than Bitcoin. We'll look at that later, but we're still in the daily uptrend, which is good. Okay, so people are anticipating that we might get some new earnings. Hello, welcome to the live stream, everybody. Starting with stocks right now. Okay, and this week we have financial earnings and a little bit of travel airline earnings and Netflix. So Netflix is the big tech earnings for this week. I would say Bank of America is probably one of the bigger financial earnings tomorrow, Tuesday, and probably American Airlines, United Airlines are the two big travel airlines this week. What we need to understand is, how do we still use charts to navigate through stock market earnings season? Well, we still have our drawing from last week. Okay, we see that the price intraday is in a quick intraday downtrend, but our daily is still holding the support. Okay, so what this means is, as long as some of our companies that are in these indexes, Dow Jones, SPY, QQQ, in the next couple of weeks, the big companies, they need to have good earnings, and then we need to maintain the support of the price. Okay, so how I prepare for it mentally is just have three scenarios. What's the bad case? Bad cases, a lot of companies did not do well in the past 3 months, Q4 2021. They can't have good guidance. Then you'll see a drop in the price if majority of big companies have a problem with their earnings. But we saw 2 quarters ago where we had this big drop. Okay, when we had this big drop, or this big drop in October earnings, September earnings, is we had big tech like Apple had good earnings as well. Okay, so it's just something you want to watch out for. It's just prepare for the 3 scenarios. If it's a mixed scenario, half good, half bad, you might see some consolidation sideways, or a little bit of an attempt like it's good and then it's bad, it's good and it's bad, right? So you just watch out for that in the price. If it's all good, majority good, then you just have another rally. We'll see a higher high in the price. Right, so that's why we have our resistance levels on the top and our support levels on the bottom, and this is going to matter for every single asset that we look at today. All right, so speed things up. Look at the S&P 500. S&P 500, I have a lot of indicators on right now. These words, this is from my idea and my profile. This is a longer term idea, right? So you can see from the start of the pandemic low, we've been in uptrend this entire, almost for 2 years now, straight. If you're an investor, right? This is why I don't day trade that much anymore, because all we need to know is this. to have a profitable investment for TA. Hello, thank you for joining. Doing stocks for this first half. Okay, S&P 500 still on the daily uptrend, just barely maintaining it. You could see here there's a trend line support down here. Let's use the candle body closes, a little bit cleaner with that. Just touched it, see, bouncing off of that. Now this could go both ways. It's mixed. If we only analyze the price right now, there could be potential head and shoulders, potential, right? Potential. So if we measure that, this is how we can use technical analysis just to get some targets. 3%, negative 3% downside, that would bring us back down to 444 price, which is generally a support level as well. Okay, so just be prepared for that. Remember, if it's bad earnings, bad situation, we also have the WEF, World Economic Forum annual meetings, where all the top brass executives of financial companies and people in the economic sector come together and they speak, right? And they review data. So it's kind of like a end of year, beginning of year meeting. So again, the three scenarios, just mentally prepare for it, right? If we have really bad earnings season for whatever reasons, right? Probably going down to 444. Support, probably hit 450, 457 on the way down. The inverse is true. If we have good earnings, it's set. This could be a higher low, and we could see a rally to where the resistance 471, 480, 488, or 490. Okay, so as an investor, as a swing trader, we need a little bit more data, right? Because this was a very strong signal back here that we're going to have good earnings or earnings prospects. Right now, it's priced into the market that we know that Omicron, based on scientific data and announcements from Dr. Fauci, CDC in America, is that Omicron COVID variant might peak within the next 1 or 2 weeks, right? So people in the stock market, they like to price in the news. So if we know that it's going to peak, right? Psychologically, people are getting a little bit happier, people getting vaccines and booster shots and in America. And if things are going to go well, we might actually get through this. It's the psychology of the market. Okay, let's move on. QQQ. Okay, Nasdaq's a little slightly different story. Okay, we're still holding above the 200 EMA on the daily. The 4 hour, we're still downtrending in the 4 hour, so that could be something to be notable, to note. Because you can see here in the price action, it's actually like consolidating and hesitating, right? This blue rectangle right here, consolidation, with a little bit of a downtrend angle. Technically, it could be called a downtrend because of just the definition of the price highs and lows. So we want to watch out for that. QQQ, there's a lot of shorting that was happening, like on Netflix and Tesla and such. We'll get to that. But you can see we have a lot of support on the downside that could hold. But just remember, if you zoom out and you look at my idea, this might be one of the breaks to the underside of the trend line for 2 years. This could be bad. It's kind of hard to see. But you can see we've been in here, right? It's only 2 touch points, but right here, this is not a good sign. Okay, so tech stocks, and then at the end of this month, the beginning of next February, is we need to see some very, very strong earnings. We need to get over Omicron, okay, as a global health crisis problem, and then we need some good fundamentals. We need some good earnings reports and hype and excitement, products and service announcements, and to get this thing to continue in the rally. If it doesn't do that, then you can see we could slowly over time for 3 to 6 months kind of bleed down in the market. I would not be surprised with the federal tapering program also in place that started at the end of November. Okay, let's move on to some individual stocks. All right. We have some requests here, so let's do it. Let's do Tesla. All right, Tesla. So we always want to zoom out first. I'll try to do 2 minutes here. Tesla, we can see it's on a monthly bull flag. It's on a weekly kind of consolidation pattern. weekly, but see, weekly's already has this down cross. Where's this? Weekly down cross on the MACD, so that could be the start of something bad. Why? Because if you just only focus on the technicals and not the earnings report, although we should look at the earnings report, it's coming out in 9 days. Okay, so if you're gonna make a big move on Tesla, maybe wait until after the earnings report. Okay, don't make a huge move right before the earnings report in 9 days, because it's gonna go up or down significantly, and you don't want to get caught in that because it'll be unnecessary, right? So what I recommend, what I do is I wait for a day or two as an investor, wait after the earnings report is released and the market digests it, okay? And then see what their reaction is. And then you could catch on to get the continuation following move from that. Okay, so you don't have to play earnings. When I tell people about earnings, you do not have to play it on the exact minute the earnings release comes out, because if that happens, like here at like a 1:30 p.m. or 4:30 p.m. Eastern, right? You can see this move sustained for 2 weeks straight. Okay, so if waiting 1 or 2 days is not a bad thing, right? So we're coming into the earnings report on January 26th. Okay, I think is that a Friday? Let me see. Let's get very accurate here. 26, no, that's a Wednesday. Okay, so it's middle of the week. So yeah, people are gonna have 1 or 2 days to digest that. Probably the following Monday after that, you'll see the significant move up or not, right? So earnings is kind of a big serious deal in stocks. All right, Tesla is still in this consolidation wedge going to the right side. Spend a little bit more time on this because it's such a popular stock. All right, our daily EMAs, it's still holding. Okay, that's good. Is it super oversold, low price right now? On a 1 hour, no, it's not. We had this bounce on last Friday, 5%, nice bounce. Swing traders though, it's still consolidation, is choppy for me. Personally, I'm not touching this, but who cares about what I'm doing, right? It's about what you're doing. So it's not clear enough for me, right? As a swing trader, this is not my setup. This is not my strategy, so I'm not going to touch that. But if you're a day trader or you want to get super aggressive with this, you start looking at the 15-minute, the 1 hour. It's 15 minutes still downtrending. Okay, it's not low price. If somebody's trying to long this, it's not the spot right now. 1 hour, the lowest spot was on Friday at 9 a.m. But if we turn all the indicators off, we look at trend, we look at support, resistance. We do have this gap resistance intraday above at 1054 to 1100. Okay, straight into the earnings. What is this pattern? Another type of downtrending / symmetrical triangle. So what this is the shorts try to push this down. It got too oversold, down here on January 10th. It rallied up. I remember calling this. It topped out, shorts attacked, oversold on intraday, and now it's going to be the challenge for the bulls, right? You can see it's trying to trend change at least. So the two scenarios that can happen on Tesla price in this medium-term time frame is if things go well. Okay, hold on. We have to take a quick look at S&P 500 for a second, just to get a little. It could bounce. So based upon the other indexes, it could bounce. So for example, if Dow Jones bounces, then you might be able to see it's a very small target, but it's like a 4% to the upside, a 2%. Very, very conservative stop loss, right? Because if you, with a small percentage of capital, because if this turns into a downtrend like this, and then we lose that support, if we lose 1,000, we lose 987, then shorts are going to start to attack that down to 940 or 900. Okay, so it's kind of in a chop no man's land for me right now. Not the greatest setup in the world, but if people really want to play it aggressively, this is probably the mindset of it depends on the indexes as well. We did come back from a vacation, so holiday weekend, so for stocks. If it turns into a rally, you might see it go to 1085, 1100, right in this gap fill. But it's also, it could be considered a resistance. So if it's going to rally, it needs to be a strong rally. Okay, so on that price action, hopefully that helps people on Tesla. But again, what is more important than the TA I just drew and explained is the earnings report in 9 days. That's way more important. Way more important, right? Because if you look at the history of this thing, you could have a bad earnings report, and then look what happens. You get a negative 30 to negative 40%. Okay, so if you long that, that's catastrophic for the trade. Okay. If you shorted that, you did put options early 2021, you're super happy about that, right? But then the inverse is also true. You have good earnings, then it'll rally. Okay, and then Reddit Wall Street bets hype, and then you get a super rally, a blow off top. Okay, so because it's consolidating right here, this is not, I'm gonna wait for the earnings report, but I have my support and resistance levels already set up in my mind right now. All right, if you want to be really on top of things, I would recommend setting 2 alerts. That's all you have to do. Okay, set alert at like $1,000. Okay, so if it breaks below that, you know, and then set alert at like 1100 or something, or 1050 at 1100. If you have a Pro Plus account, you could just set 3 alerts like that. Okay, the 3 horizontal alerts that alert you whenever the price goes up, and then you can make a decision of what direction you're going to go in. Alrighty, all right, let's do ABEO, and then I will finish up with stocks. Okay, ABEO, Abeona Therapeutics, earnings in 63 days, NASDAQ, pharmaceutical stock. It's like more biotech, and it probably has its own news releases and such like that. Okay, so I'm gonna leave it up to whoever requested this to stay on top of the fundamentals of the news and the earnings. I'm looking at the technicals only. The problem with these kinds of stocks is, going into earnings, it could be very risky. All right. So the thing is generally stocks follow the indexes more than 50% of the time. So you have 50, 60, 70, 80% correlation, which means that, if S&P, Dow Jones, and NASDAQ starts crashing, then probably smaller companies like ABEO, even like MJ companies, the non-big companies, the non-blue chip big stocks, it'll just crash because it doesn't have enough power and energy and momentum to sustain itself. What can reverse that is if this company has like an incredible news release or brand new pharmaceutical technology that's going to flip things around for this company. On the technicals though, if I'm just only looking at the charts, this thing is downtrending hard. Okay, it's downtrending hard. You just look at the weekly chart, this is pointing down. This is down arrow. So if somebody's a conservative investor, they would not touch this because it's downtrending. Okay, the only reason somebody will buy it is if, as it's like a small investment or medium investment, maximum is if this company is going to invent something like brand new that's going to change the game, right? So biotech plays are kind of older plays in terms of vaccines. Remember, like Moderna, we had Novavax, we had Eno, that was like early 2020 to 2021. So ABEO on the technicals is downtrending. This thing, every single EMA is pointing down. So I just want to point that out to somebody. The problem is, yes, it's oversold. Okay, it is oversold now, but at the same time, though, you might get a slight bounce if someone's trying to swing trade it, and then I understand. But if somebody's trying to invest it and hold for like 5 years or something, it's like, there might be a better company than this one. But if somebody's just trying to play a low technical bounce, a daily low RSI oversold or something like that, then okay, I understand that. Just want to pick your targets, right? If you're going to try to play it, you have to understand the risk reward of this thing. This stock, because it's basically a penny stock, it's 27 cents. All right, so any any move on this thing is significant volatility, which means risk management is important, meaning small amount of capital. This is not an all-in stock, in my opinion, unless you know for some reason on fundamental news that this company is going to, you know, the products, whatever product and service this company makes is going to change everything, right? So we measure this little target here. We are finding a little bit of support here. There is a little bit of bullish momentum on the 4 hour. That's why I understand why people are gravitating towards this, because it's low momentum, possibly upside down head and shoulders, right? So if it's going to pop, this thing's going to pop where 15, maybe 40%, maximum 100%. Okay, so that's why. But your risk though is right under this candle, 25 cents. If this stock loses 25 cents, the shorts are going to attack this thing one more time down. So that's the risk. So very small amount of capital. If somebody's a trader, the general rule is 1% risk of capital only. Then you can sleep at night. Then if this thing crashes, doesn't matter, right? We only lost 1%. Who cares for that one trade? But if somebody loses negative 50% of their account on this because they went all in here and then it rallied, and they held and it failed, or if it fails like that, then there's no point to swing trade this, right? So it depends on you. It's your decision. This is not financial advice, it's educational. What I've experienced and seen in the market is it depends on your risk tolerance, your risk management, your trading style, your time frame, and your personal goals. So again, this is not an attack on anybody's idea. I've seen this so many times where you have a pharmaceutical or like an MJ marijuana stock or like a psychedelic stock that's downtrending so hard, and then because it's low purple RSI, people want to buy it. But you saw here that this October 2021 low purple, it did have a short day trade swing trade bounce, but then if you look at the longer term investment, it crashed down another, shorted down after earnings negative 70%. So just be very, very careful with these types of things, especially when going into earnings season. But again, the only thing is, if I was going to play this, all right, they're possible upside down head and shoulders on the daily. If somebody's going to try to play a little bit of bullish divergence, bullish momentum on that 4 hour, but the weekly could go a little bit lower. The weekly could go a little bit lower. I would be a little more comfortable if this started rotating up. So it could bounce. It just, it might not bounce in 2 days if that's what somebody wants. All right, so please be careful with these stocks. I went a little too long on that one. All right, let's look at some of these. Hopefully that helps you. So let's look at some of these earnings volatility ones. We'll just get a snapshot visual of what's going on in the market. Okay, so Goldman Sachs is reporting. Goldman Sachs. Let's take a look at these daily charts, right? Goldman Sachs, big financial company. You can see here, consolidation to the side. That's not strong. Not strong. Is it low RSI? No. So for me, this is not my style. This is not my style and strategy. Not my style and strategy. What was stronger? Goldman Sachs in 2021. Look at this very strong uptrend. That's what we want. That's what we want. Right? As swing traders, buy low, sell high. Try to. Okay? So this is what we want back here. But consolidation, I do not want that. Because it's a coin toss. And there's potential triple top up here, and then there's a potential triple bottom down here. So it just doesn't make any sense to me right now. Just want to see what the earnings is, wait for that, and then make a play. But you can see here, sideways. You could also argue though, somebody could argue, say, wait a second. This was also consolidation. Yes, we had a clear signal for the breakout. So, experienced, advanced traders, they're looking not in the middle, they're looking down here, the break of this low or the break of the high. That's a signal, generally. All right, so just be careful of that. Bank of America, we'll just do some rapid fire. Reporting very soon, tomorrow. So you can see here, it tried to break out above the resistance here and the support as well with the trend line on this bottom side. You could draw another trend line on the top. So Bank of America towards the top of its trend line resistance up here. All right, so if it has any negative earnings, you can see where the clear target here is on the bottom side. If someone's going to try to short it, And then if it's going to break out, we want to see this. A retest, make sure it's strong support, that it's for real, and then we're going to go up. It could go up, make a higher high. It could. If the bad earnings, it'll consolidate or make a lower low eventually. Okay, next. Schwab, Charles Schwab. Very strong, much stronger company. So you could see if you just look at all these financial companies back to back, just look at stocks. Charles Schwab is in a healthier uptrend, right? Because Goldman Sachs was going like that, sideways, consolidation. But Charles Schwab is still in an uptrend. You could draw an extended trend line almost from the bottom here or from here. You can see that just holding. Okay, this is what longer term TA people are using. The only problem is we hit the top of the trend line right into earnings, so it all makes sense. Rallied into it, and then experienced traders are gonna wait 1 or 2 days, see what happens. If it's bad, execute the short, right? If it's good, play a safe long, like a conservative long up there. All right, next, Interactive Brokers. Well, Interactive Brokers is not the biggest stock in the world, but I would be a little bit wary of this. What I see right now, you can see the clear double top in the price right here in the resistance. Okay, so that is not that exciting, because if this was real, this should have been a much longer, like a monthly higher high like that. But again, it's a stockbroker stock, so it's not the hottest thing in the world. You could see possibly an ascending triangle setting up here that we just drew, just using our TA lines. Okay, I drew this line and I drew this line, and you can see that it's setting up. If it's bad earnings, going straight down to $68. If it's going to break out 89, retest of 82, and see, try to make that higher high pattern. Interactive Brokers, interesting. United Health Group. All right, this is kind of just going in the order of the earnings, but there's some healthcare insurance action. Draw the trend line. This one is obviously in a clear uptrend because, health care is extremely important in today's situation. So we can see our resistance and our supports. As such, it's still in a higher high, higher low pattern, but you can derive the two targets just looking right here. You can see this one right here, 435. If this thing rallies, then right at 519, a retest of there could be the play. Next, I'm not going to do all of these. Maybe we'll just look at it. So Morgan Stanley's consolidating to the side. It's very similar to Goldman Sachs, meaning that you have a resistance, you have a support. So then you just watch for the break of either one of these. You could set 2 alerts. Very simple. Next, Procter & Gamble. Okay, this is actually different because a lot of people actually in America at least, or globally, buy P&G products, right? If you buy like soap, or if you buy like tissues, it could be actually produced by Procter & Gamble. Those types of products. So it's important, right? And you can see that as Omicron started to rise, then you have people buying literal P&G stock and P&G products in real life. Okay, I'm sure I bought some in the past couple months just without even thinking about it. So we're seeing the trend line is holding, and this is what I'm saying. If you get a breakout, it's going to be a breakout, a real one here. But I'm seeing a clear potential head and shoulders, also a double top resistance. So we can actually measure this thing now, measure the structure, and you can get a 3.5% up or down move. 3.5% down brings us down to 152. But if it holds, 3.5% would bring us back up to the top of the head, 163. All right, so there's the 2 targets. There might be a third one down here, 145, if earnings is bad, meaning your price is going to go up or it's going to go down to one of these 3 places. And that's all you do to prepare, right? Wait for the earnings. Wait for after the earnings, okay? How can you tell? Even if you look at the charts, you could see people wait. Experienced investors, they wait after the earnings. Like this one on October 19, there's hesitation for like 3 days, and then it went up. Okay, same thing here. After the earnings, there's like hesitation up for 2 days down, and then a little bit. So that one is more mixed earnings. Okay, that's how you play these things. Sometimes you get bad earnings, right? Even if these are not the earnings, just the two numbers, the EPS and the quarterly revenue, that's not the only two numbers, right? There's other things why this thing is downtrending. So, you know, you don't want to just look at the two numbers. All right, we hit our 30-minute mark. Let me do one more because the most important one is Netflix, obviously. So Netflix, remember, if you were watching my stream, I don't know, weeks ago, I called this Head and Shoulders double top. This thing is huge. You know, if you want to see what a Head and Shoulders looks like in the market, this might be one for the books, right? Just visually, 2 seconds after opening is, oh, wait a second, there's this Head and Shoulders. If you don't believe it's a Head and Shoulders, there's a double top here. Okay, so there's two ways to measure it down. 7% to downside, we already hit that target. The first target's hit. Then it's like, wait a second, is it a Head and Shoulders? Okay, if it's a big Head and Shoulders, that would be negative 18 down. Percent down. We almost hit that target, so it could be. So you can see the downtrend on this thing going down hard. Netflix earnings, so Netflix could be a long play. It could be, okay? Because I have to think about it. What's happening in real life? People are staying at home because of Omicron COVID, and what are they doing at home for entertainment? Watching YouTube, Netflix. Even I watched Netflix like 2 days ago, right? I don't even watch that much Netflix. So even I'm watching Netflix, right? So people are signing up, people are using the service. So it's just a matter of, you know, Q4 2021, did they get, if you follow Netflix earnings, what's the subscriber count? How many people signed up? You know, what products and services, how much revenue did they make? You know, if you know Netflix, it's a little easier if you actually know the product. Okay, we don't have a death cross yet. But again, I wouldn't be surprised if we try to hit the support of like 485, if it's going to be perfect textbook play, 485 to the downside and then bounce. But eventually this thing has to let up, okay? Eventually. At one of the supports, okay? This one is already, if anything good happens on Netflix, it's ready to bounce up. So this could be an interesting play. All right, risk, this is not the perfect spot to buy, but you know, 7% to upside, 3%. That could be one easy trade. You get a 2-to-1 reward to risk, right? If it doesn't work there, then you can lower it if it keeps going down. But if it's going to crash, okay, there's room to go down. But for a medium-term trade, this thing might be ready to bounce right after the earnings release. So Netflix, keeping my eye on that one. All right. Let's go do some crypto, and then we need to stop. So 27 minutes left for crypto. All right, crypto. Let's before we go to Bitcoin, gotta check total. The total crypto market cap, TOTAL. All right, I know it's kind of messy, but you want to keep on top of things. All right, so we have our support and our resistance. Okay, this is from my idea from last year. It's still good. Even our Fibonacci, let me just hide this thing first. All right, so what happened is we were rallying, we're holding the trend line until now, until December 2021. All right, so this is like a not good sign. It's kind of a bad sign because every time from 2020, we held the trend line, bounce. This one did not bounce. That's why we have to be open to the changes that are happening in the market, is because I'm reading articles. Yes, I read that people are calling 60,000 Bitcoin by the end of this year. But before that happens, we need to hold the support and reverse the trend on Bitcoin, which I'll show you. But this right here is a yellow to orange flag, meaning there's a warning sign. If we do not rally in the next 3 to 6 months, Bitcoin's in big trouble. Crypto's in big trouble, right? But it could also be that people are distracted. People are distracted by, you know, other things in life right now. Meaning when the hype and excitement comes, if it ever comes in the market, then we'll see, you know, social media explode with Bitcoin hype. All right, so we turn our Fibonacci back on. Where is it? And you can see the total market cap bouncing right off of this 382 Fibonacci support right up to our resistance line that we set last time. And we put our trend lines, the intermediate trend lines, draw this. And then you also draw your resistance and your support. And then I mean, you could put your alerts there too, and then you just boxed in the market. You just boxed it in. The thing is on the weekly is, yes, if this turns out to be the giant head and shoulders right here, if this turns out to be real, we could get some extreme downside, negative 50% on Bitcoin over the next year. Hopefully that's not true. But if it is true, that's the bearish target to downside of crypto. The upside is if we hold it, this could be, you know, it's not the cleanest high or low, meaning this. But okay, if it's gonna stop here, then we need to see the higher high or at least a consolidation like that on crypto. But it's starting to feel a little bit like May, a little bit like June. Alrighty, so we kind of need things to just, if it's gonna sell off, just let it sell off, right? Crypto until it gets super low, and then all the experienced and value traders who are looking for low discount crypto are going to buy there. All right, this is not the best discount spot for crypto. It's only, what is it? It's only 30% off. People want to see more than that. Okay, intraday, yes, we are like a 15-minute, 1 hour on the RSI. Yes, we could bounce in 2 or 3 days, but I'm looking at from a longer term perspective. Okay, is this the lowest low of Bitcoin relative? No, not really. Okay, so support. Let's go to Bitcoin so I don't give confusing numbers. Bitcoin. Now we're looking at BTC USD. Okay, so what am I saying? Is we have to hold this yellow bar right here, the support. If we lose the yellow bar, then shorts are going to try to attack this thing down and crush it as far down as they can. Okay, because they want this fake head and shoulders to actually scare people and make them sell out of their positions. Okay, if it's going to be, you know, mentally digested by traders. So again, if the head and shoulders is real, it could be catastrophic for Bitcoin. 50 to 60% loss. It could take us back down to $16,000 Bitcoin. It's not impossible. Seen it happen before. Just rewind the chart to 2018. Right here. 2019. Happened 2 times already. We had our Dogecoin crash. We have not had the big crash yet after this rally. All right. So if it's going to happen, I would not be surprised. Because why? We have a potential double top here. It's a resistance, so I'm just going to leave this here for a while. Resistance on the top. And we have our support line. We could just draw 3 lines, and now we don't have to panic about anything. Okay, because if Bitcoin crashes, where's it going to go? It's going to go straight down to here, 30,000, eventually, right? But I think from experience, if you traded, you know, because why am I saying this stuff? Because we have a death cross on Bitcoin. We have not had a death cross on Bitcoin since June 29, 2021. We have a death cross on Bitcoin. So if you know your indicators, death cross on a daily, that is not good. Okay? Because it can just mean that we lost momentum. We had a death cross here. We had another death cross in the pandemic. Right? Again, if you're an ultra conservative, not ultra conservative, but if you're a conservative investor, you want uptrend, okay? Don't buy a downtrend. Why? Because it can downtrend negative 80% on you and then go up, right? So if you want to invest on Bitcoin, you want to see uptrend. You want this thing to go up, not down, right? If you're aggressive swing trader or day trader, okay, then yes, you could try to play your 15-minute, 5-minute oversold and try to get that. But even if for a swing trader, for me, is this low value? No, it's not. It was low value 1 week ago on the stream when I called it, saying, maybe somebody could play this bounce. Remember I said that? The target did not go as high, but it went close enough, right? It was a 7% to 40% target. Did it hit that? No, so maybe the target was too big. So if you do a 4 to 8%, then that was the target for day traders. Okay, but still, it's still in the green for if somebody bought it at 40,000, which was our support call. right? Because if we only look at price action, sometimes it's good to only look at price action, all right? If this thing holds, it could hold the support. You can see that 42,000, 41,500. If it holds, you could see that we could get another leg up, higher high to 45,000. And again, we are in stock market volatility, so I would not be surprised if we get a bounce on Bitcoin. Why am I spending so much time on this? Is because if you know how to do TA on Bitcoin, your chance of making money on altcoins goes greater than 50% if you do it right. All right, so I'll just leave it here with two targets. We drew this downward sloping trend line wedge on the 4 hour. You can see the support is way down here. The support is not 40,000 only. If it's going to break down below support, we're looking at 38K. Does that match up? Yes. 40K, 38K. If we lose 38K, we could be in some big trouble with the shorts. So that's your downside target. Your upside target is up above here, 44,000 to like a 47. Okay. Oh, thank you so much, Z Angus. Thank you for the 100 coins. Really appreciate it. And yes, I'm just trying to help, educate people on TradingView. I'm live streaming here on TradingView, YouTube, and Twitch. I have a free Discord group that's open right now. And thank you so much, Z Angus. Really appreciate the support and the 100 coins. It's going to keep the streams going and the ideas flowing for everybody. So thank you so much. Best of luck to you and hope you have a good week. Thank you. Okay. So again, and Z Angus brings up a good point, is I'm not using a ton of indicators or tools. It's these are like the classic oh, thank you so much, Angus. Oh, you're a TradingView mod. Thank you so much. I love TradingView. It's the only chart service I use. So Angus brings up a good point, is that I'm not using a ton of indicators, right? And I'm not using, 50 indicators. I'm using the core foundation of technical analysis that's available here on TradingView, like on the tool side, on this left side, right? And then you have your indicators on the top side here available. But we just keep it simple. Keep it simple. And again, I'm not like a super aggressive day trader. I'm a swing trader and investor. So that's why, my streams will last like the whole week, the setup that we're talking about. Okay, so let's go on from Bitcoin. We only have about 17 minutes left. And let's look at some altcoins. I know people like talking about Cardano. Let's just switch over to Cardano right now. What happened here? Well, multiple things. This is a perfect example of where fundamental news can change everything, because we had that Cardano news hype about the metaverse integration and the services, right? And you can see it here. Why is it important? Why am I bringing this up? Because we drew this trend lines 1 week ago exactly, and then where did the price hit? It touched the line exactly, the yellow line, this line right here, exactly right there. Okay, so if you do your TA correctly, or you put in some work, some sweat equity onto the charts, and you draw something, you draw your support and your resistance. Let me just do it again. If you draw your support and resistance, so there's a horizontal one here first, right? Look at all these little stick wicks here. These are the bottom of the price. You just draw it for support. And then you have your big resistance like up here, but there's also like an intermediate one down here. But there's also this support down here. Okay, so let's pretend you only drew 2 lines. I'm drawing too many lines. Right? You just look at this and you say, wait a second, there's some kind of support thing down here at right just above $1, just above where my call was last stream. And then you could draw your trend line resistance on the top. Didn't quite hit the target, but close enough. And then we drew this one, remember, on the stream. So now you can see, I might have briefly said it, that same thing with Bitcoin. Bitcoin is like here right now. Okay, so if Bitcoin goes down, it's going to drop right into that trend line support. The X marks the spot. There's two areas, horizontal and diagonal, right here. That's saying this is the support. Okay, so where is the obvious upside target? Somewhere in the middle here, the resistance here, and there's another resistance here. So there might be a little bit of life left in Cardano, but I'm not going to FOMO into that because, you know, I don't chase. I try not to chase, okay? Again, this is very risky if you're going to buy Cardano right here. Also, there was an intraday 4 hours dirty upside down head and shoulders. What am I talking about? Is this. Left shoulder, head, right shoulder, neckline. Once you got the break above the neckline, you measure this thing. 11%. We went 2 times the target. That thing is done. It's over for now. Okay? If we're using well, not, I shouldn't say it's over or done, but it's mostly completed. The measured move of the upside down head and shoulders. So, you know, it doesn't really take a huge amount of effort. Like, you don't have to spend 1 hour like me looking at charts. It's just, you have to understand, what is the price? What are the candles? What does it mean? Right? Are you a long? Are you a green? Are you a bull? You want things to go up? Or are you a short? Are you a bear? You want things to go down, right? What price patterns are you looking for? There is also, yes, it's definitely overbought. So that's what I'm saying. No FOMO, right? So the better spot to have bought was way down here, the dollar mark. Okay, for swing traders, right now is not the time to long this thing as a swing trader. Why? Because it's literally RSI saying overbought. On the 4 hour. 1 hour, you're actually losing momentum, okay? So you're having negative divergence. That's bad. Okay, it is up cross. So again, it's not completely 100% over because people are coming back from their USA break today and stuff like that. But what might happen on intraday, which happens a lot on crypto, unless this thing's going to moon for whatever reason, right? It might pull back and then go up once because it needs to pull back on the intraday, and then on longer term time frames, like a 1 hour, 4 hour, it might bounce up. Yes. That's why, you know, very experienced, like Angus knows, very experienced traders, advanced traders, okay, support and resistance is the way to go. Why? Because you have real price targets in the market. If you only use like RSI, you could get into trouble from experience, okay? Because the RSI is calculated, it's derived from the price. So when you do support and resistance, you are analyzing the price. And that overrides and supersedes everything, in my opinion. Price is the most important indicator of all. And as traders, we're trading the price. We're not trading the RSI, you know what I mean? Thank you so much, Angus. Really appreciate it. Again, we're not trading the RSI only. You know what I mean? Like when you go onto your stock exchange or crypto exchange, we are trading the asset at that price at that second in time. So it's all about the price. All right. Getting a little too education heavy here. So let's just take a few steps back onto the TA of the crypto, and then we're off in about 10 or 15 minutes. All right. So Ethereum USDT, we're starting to downtrend here on the 4 hour. Okay, what we have to realize is, you know, the early hype of crypto from like 1 or 2 years ago, okay, because we were off a pandemic low crash, that is over now. Okay, I just want to make that like clear for our people. Is if you just started crypto like 1 or 2 months ago, there was like a lot of percentage, 3,000% profit move that already happened in real life. Okay, so you know, if you're an investor and you're wondering in your mind like, okay, when should I invest? Is you invest when there is a market crash. Okay, is it crashing now? In my opinion, it is not crashing. If you're looking at a 1 minute chart, then everything's crashing every 5 minutes. But if you zoom out to a daily, it is not crashing. We're not at a low. You just look at it. Where was our pandemic low? Right here, March 2020. On that exact day. I remember that day when it was happening, real time. I still remember that, right? But right now we double topped off this November 11 and November 13 and 25, right? Potential, watch out for that. What I'm saying is, also, if we zoom in, if we use our EMAs, okay, we do some quick trend analysis. Okay, what has a death cross on a daily? I'm talking about, let me show you, let me just turn off, I just want to see this. There we go. Okay, so this is the 50 EMA and the 200 EMA, right? These are the most popular, if you just look it up, for what is a, you could learn about it on TradingView too, or Google, is you have your golden cross, you have your death cross. Your death cross, okay? Meaning the 50 EMA goes below the 200 EMA. Downtrending confirmed on a daily for now. Okay, sometimes when you get a downtrend, it could destroy itself, right? Negative 60% down. Sometimes when you get a death cross, maybe you only go down 20%, but that's a lot still. Death cross, where did this thing go down? Negative 20%. So if we death cross here, maybe Bitcoin might go down negative 20% because it happened 4 times before in history, right? So 35K Bitcoin to 30K Bitcoin is not impossible, right? You just need enough shorts, Bitcoin options, Bitcoin futures, global Bitcoin futures, and then once you lose that support, shorts are waiting to feast. They're waiting to execute their strategies and fire, right? So let's just see what else has death cross. Cardano had a death cross, but then rallied to the 200 EMA. So you can see here, just for an example, we got the death cross, and then from the close to the bottom is a negative 25% move. Happens. Dogecoin death cross, and we had the pump already. We already had this rally. Right after last, it's kind of strange. After my stream, like a day after, we catch it, and then it goes up a lot. 50%. Anybody buy that? Doge? Uni's already death crossed. Down for some time now. Litecoin death crossed. Cash death crossed. Chainlink death crossed. So it looks like, what is it, half? Shiba Inu is not death crossed yet. So Shiba Inu is still consolidating. That's something to note. Matic still in uptrending. Stellar death cross down. Filecoin death cross down. VeChain death cross down. Ethereum Classic, Tezos death cross down. That's why I'm not getting hyped up about this yet. When am I going to get hyped up about this? When I see everything up cross again. What does that mean? Then you'll get this action. You'll get some of this uptrending action as a long, right? It's just one indicator. So you can't, from my experience, one indicator does not explain everything about technical analysis. Okay, I'm just showing, we're doing like a comparison right now. EOS death cross for a long time, since September. November death cross down here. IOTA consolidating. GRT death cross. NEO death cross. Waves death cross. Maker. OMG. AMP just recently death crossed. Okay. One still trying to hold on. Rally dash death cross. And you're like, what? This is boring. Right? But it's like, no, you need to know, like, as traders, you kind of need to know this. Get a feel for the market. Understand what's happening. Right? BAT holding above its 200 EMA. Zen. Look at all these death crosses, right? If you look at the stock market, you don't see as many death crosses in the stock market. Okay? Like, if you just flip back to Dow Jones, this is not death crossing. No way. We're still uptrending. It death crossed in the pandemic once, and then it up crossed again, right? So it's different. Crypto's in a much, much different, worse state, to be honest, than stocks right now. So what needs to happen is, okay, why am I looking at death crosses and golden crosses and EMAs and all that stuff? Because If it's going to death cross down, where is it going to go down to? Then you set up your support and resistance. Support 40,000. I shouldn't erase that one. Let me go to the clean chart. Let me go. Just go Bittrex. Okay. Get a clean chart. Look, you set up your support 40,000. You set up your support 35,000, 30,000. Now you're prepared mentally. If it's going to death cross down from the spot, negative 25%, that's straight down to 31,000 range. Not impossible. Not impossible. But if we get super oversold on this RSI, which could happen if it just, crashes down a little bit more, then we could bounce up. And what I want to see though in the price, keyword price, is the uptrend reversal. Okay, because this is still downtrending on the day chart. But what I need to see is like 2021, this is non-stop uptrend for 6 months. If we're going to see that, it's going to need to base down here, okay, on support somewhere down here in the 30,000s or wherever it's going to go. And then we're going to need to see the price at least go sideways and then uptrend. And then investors greater than 50% chance are going to buy at whatever spot that happens at. Okay. So for me, Bitcoin right now is not, I shouldn't say that. It's Bitcoin right now it's mixed. You have half all the altcoins downtrending. Bitcoin itself is downtrending. And now, if you're a swing trader, what matters is you're trying to catch the oversold bounce intraday, like a 1 hour, 4 hour. If you're an investor, I'm watching more of the weekly and the daily. The daily is low RSI oversold area, but the weekly is not. The weekly is not. When we had our pandemic crash, we crashed down to the 200 EMA. Are we at the 200 EMA? No way. Not even close. If this turns out to be a double top in the price on the weekly, this is like our super bear idea. This thing's probably going to go lower than the 200 EMA at this point. It might go down to like a 400 EMA. Let's just experiment with that for a second. Let's get a 300 and a 400 day EMA all the way down here. It might not even generate, but no, it doesn't generate. But you can play around with that. It's an interesting study. Interesting study. The 100 EMA is somewhere in the middle right here, like that. But you can see here, okay, you can feel it online too, as well. Who is excited about crypto right now, except for day traders and swing traders, right? Investors, anyone trying to play 68K, 69 long K to 100K, did not happen. Okay, we established that double top, faded down to support 40,000, 30,000, 20,000, 10,000 is remaining. All right, here's a good example of Fibonacci. Why am I spending so much time on this? Is again, if you can analyze Bitcoin well, then you know when it's going to rally, and then you'll know when altcoins are going to rally as well. Okay, so this is how I was able to buy Bitcoin at 6,000. Where is it? $6,000 and $9,000, and then sell right here at the top of around 60 to 61,000 range. How did I know how to do that? Technical analysis and soaking in the global sentiment. Because I remember on this day, this March and April, right here, people in the chat rooms, online, on social media, they were saying Bitcoin to $200,000, $100,000, Dogecoin to $1 or $2, and people were FOMOing so hard. And just like Warren Buffett said, like in my Discord, I want to say the quote correctly, because it's one of my favorite quotes by Warren Buffett. Be fearful when others are greedy. Like when the majority of people are greedy. Be greedy when others are fearful. Okay? So we're over time now, but when were people fearful on this weekly chart? When you just turn everything off, you don't need any volume. Look at price only. Turn off the watch list. This is what I like to do sometimes. Get a pure chart, price only, multiple years. When were people the most afraid? The pandemic. This right here in the circle. I remember on this specific day, it was like March 13, 14, when it hit the super bottom low. March 13, I still remember that. It burned into my memory. The market was so afraid, so angry, so scared, so shocked, just all negative emotions on that day because it was ridiculous. March 11 to 14, maximum fear in the market. All we had to do is buy. 2 buttons, buy. And then when did I sell? When we had maximum greed in the market. Why? People are saying, oh, Bitcoin's going to go, whatever, super high price, Dogecoin, super high price. But I'm like thinking, wait a second, is this a discount? Is this low value? Is this low price? No. Is it consolidating? Is it going sideways? Yes. Do I see a head and shoulders? Yes. Do we have maximum greed in the market? Yes. And then I made a decision, sell all my coins. I'm out, profit, done, deal. And then it turned out to be the top. Right? So that's how, if you're an investor, you got to have super emotional discipline like that. You have to be kind of those people where you chart your own ideas. Because I remember people telling me, like right here at 9,000 Bitcoin, that we're going to go down to like 3,000 Bitcoin again or 300. And I was thinking, the chart is not telling me that. The chart is telling me that we're uptrending and about to go up. There's ascending triangle there. There's like a ascending wedge here. And then we broke out of that. So that's how, if you have patience, it's a long time to have patience. That was like a 1 year investment, 400 days. But that year passed by so fast for me, at least mentally wise. So how does that relate to right now? We do a Fibonacci from low to high, the pandemic low to our relative pandemic high in time at this point in time. And the Bitcoin price is not a low price for now. Okay. I might be interested if it goes 50% off. So if it ever comes down to 30,000, I can guarantee that certain swing traders are going to buy here. They're going to buy here at 20 and they're going to pick some up at 12. If it ever goes below 10K, I know some investors, they just might buy at the lowest price wherever down here. That's getting serious value, okay? Because it's the same asset. It's what Warren Buffett taught me. Let me slow down. First, we have to pick good asset, stock, crypto. It needs to be the right asset, the right company. First, right? Like a good company. And then it's a matter of, for technical analysis, is you buy good companies at a discounted value price. That is literally what Warren Buffett teaches in all of his books. If you want to get better at investing, just read Warren Buffett, read Charlie Munger. They have phenomenal books. And then if you actually understand it and apply it to finance, it changes everything. They're two of the most successful investors of all time in the United States. So I really apply them. I know Warren Buffett and Charlie Munger, they do not like crypto, but their financial advice still works in crypto, believe it or not, because it's just human psychology, right? So again, why, as an investor, if it goes down there, why am I waiting for it? Because it's the same asset. Bitcoin generally is going to be the same. If it's at $60,000 or at $20,000, the asset is the same. Bitcoin is the same for the most part. It's still Bitcoin, the cryptocurrency, right? So then it becomes a matter of, do I have the skills in technical analysis to even figure out what price levels it's going to go down to? Can I analyze the price? Can I analyze the volume, support, resistance, trend lines, right? Indicators. These are, and then risk management. And then it all becomes a matter of executing that. And then for me, I just ignore the news, to be honest. Social media news, I just ignore it. Because everyone was talking so much about whatever they want to talk about on the way here, and then all you do as investment is you make 2 decisions or 3 decisions. Where am I going to buy? Am I going to hold or not? And then where am I going to sell? Simple. Sounds simple. It's actually harder in real life though. But that's the distillation of it. And then it's about risk management. Okay, how much money am I going to put in here? Okay. Usually if you're starting off as a trader, we do not go all in. You only risk 1% maximum. If you're beginner to intermediate, only 1% maximum per trade. Why? Because then you can never blow up your account and have a catastrophic loss and go bankrupt in your account. You can never blow up your account because you're only risking 1%. So for anyone who's new here, what does that even look like? I'll just go over like a little bit because this is actually extremely important. Risk management. Okay, so if your total account size is, let's just say 10,000 US dollars, right? There's something called position sizing, meaning per trade, how much money are you going to put in? Okay, and it's in percent. Okay. So position sizing, you're only gonna, and then wait. Actually, you need actually I'll put the stop loss first. Is the negative % loss that you can use maximum for trade. So if we're saying 1% loss maximum per trade, okay, then you have to decide position size per trade. Is you can have excuse me here, I don't want to confuse people, so let me do this part over. Okay, so it's maximum, let's just make it super simple. Maximum loss per trade, negative 1% total account. All right, then you have your position size of, you have to calculate this. That's why if you're a swing trader investor, you have to do like 5 minutes of calculation. Okay, so you have your total account size, whatever it is, then calculate it using a calculator. What's the 1% loss of your total account size? And then once you figure that out, it's a negative $100. Okay, so your position size when you buy like a Bitcoin or a stock or something, you're only going to put in $1,000. And then your stop loss is negative 10%. Okay? So if you put in $1,000 and you lose negative 10%, that only equals negative 1% loss of account. Okay? Does that make sense? Okay? That's how, if you're a trader, this is how you survive for 5 years in the market straight. Right? You execute this well, then you should never blow up your account. Okay? The problem is people have problems with one of these 3 areas. So a lot of people just go all in, all 10,000 or whatever your maximum account on one trade with no stop loss protection at all. And then if it goes down negative 25, negative 50%, the account is blown up. Okay. So, this is per trade too. Okay. So it's a maximum account loss, total maximum account loss in the industry is negative 10%. Right? So you can only lose a maximum of $1,000 before you have to liquidate all your positions and then reassess what did the trader do wrong. So it's one of 3 things. It's bought at the wrong, it's the TA was wrong, meaning like they bought high and then it crashed down on them, or the position sizing was wrong, they put too much money in the trade, or there's just no stop loss at all. No stop loss to the downside or no profit target. Okay, so what does this actually look like on paper? Okay, so if somebody, let's just pretend for educational wise, we're going to end here because this is like the most important thing besides the actual technical analysis of charts is, let's pretend you're going to buy, you have a buy order at $40,000 Bitcoin. Okay, then using this rule, okay, you set your stop loss at around 10%. I'm just, you know, dragging it. So that would be somewhere around 35,892, $35,892. Then you set your 2-to-1 risk reward. So minimum investment swing trade 2-to-1. So that means the profit target is 48. That's your minimum profit target. Okay, maybe at 1.5 if it's really choppy market. If it's really choppy, okay. And then you buy here right at where 40,000. Put your buy order there. So if you're on a crypto exchange, you usually can only set your stop loss. Okay, and then you see how position sizing, okay, position sizing matters, because some people are just going to put all in and close their eyes and never put stop loss and never check on the position for like 30 days. And if they're wrong, they are really wrong. And you could only make like 4 mistakes like that before you go bankrupt in your account, and then you're done as a trader. So you can't do that. Okay, we have a question on YouTube. What if a trader wants to hold an asset long enough to wait for the price to go up? Okay, so if you're an investor, it's different. This is more like trading. Okay, so this is like day trading and swing trading. Okay, investing is different. Okay, so I don't want people to take me the wrong way, so I have to like retype it. Investing is different. So again, this is just educational advice. I'm not telling you what to do with your money. This is not financial advice. This is educational. Risk management, investing is different. So if you have the same total account size of 10K US dollars, then maximum account loss would probably be larger than that. It's usually negative 25%. Okay. And that is a huge loss. If your account is like $100, then it's not a big deal. But if your account size is $100,000, $1 million, 25% loss realized is catastrophic. But still, as an investor, that's the kind of like, what is it? Size you're dealing with, like the low and high that you're dealing with. Okay, the size of the position. Okay. But again, that's why Warren Buffett, if you read his books, he says you want a margin of safety. So you should never really have a negative 25% loss if you're doing it really well. So you still can position size, right? Because if you have a portfolio, position sizing. And you heard the expression, never put all your eggs in one basket, right? So if you have a portfolio of 10 stocks, that would still be only 10% capital in each investment, right? And this is very general advice. This is not like the only way to do it, because some people, negative 25% is too high. They would still only do negative 10% or whatever, right? But it's like maximum. If you have a negative 25% account loss and you realize like, wait a second, I just bought at the top on accident, some people would say just liquidate. You know what I mean? Because what happens is if you do, you still need a stop loss though, right? On all positions. And you need to calculate this in dollar and percentage. Okay? So how does that work? You can see here that, let me draw 3 boxes. It's going to be kind of hard to see, but day trader, like a scalper or something, your risk to reward is much smaller. You're only doing like probably like 2% to 4% or something like that. It's like a tiny box, right? A swing trader might even just be a little smaller than that, like maybe a 5 to 10%, right? But then an investor, longer term, see if you get this like 20%, and then it's something like that, right? So you can see the 3 boxes are for day trading. This is day trading, swing trading, and investing. You still need stop loss. It's just everything changes. The position sizing, the maximum loss per trade, the use of your capital. Okay, it's all different. So you notice then in all 3 scenarios, if you're a disciplined trader or investor, you have a stop loss and a profit target on every single trade, on every single investment. The problem becomes when people have no risk management, meaning they don't manage the account properly and they have no stop loss at all as trader. So this is still trading focused. Okay, because there's some investors like Warren Buffett who are going to hold for life and no stop loss. Okay, but that he can do that because his financial analysis is so good that he picks good companies, right? Like if somebody's going to all in like on a marijuana company or a psychedelics company or on a crypto, you just got to be prepared to have negative 80 to negative 90% drawdown, meaning the investment at some point is going to go down negative 80 to 90%. And then you have to have the emotional discipline to not sell if you believe in that investment in the company, right? So again, it depends on like what are you actually doing in the market? Are you day trading? Are you day trading? Are you swing trading? Are you investing? There's a fourth thing, and it's actually just called HODL, right? HODL equals hold forever. Okay, that's a fourth strategy of investing. Okay, but usually people who are HODLing, like you don't even need to think about trading technical analysis, right? Like you don't even need to think about it. Because if you're a hodler, who cares, right? From a certain perspective, that's like the simplest strategy ever. You just buy and you hold forever. Who cares what happens? But you still need to have the proper position size for hodling, though, meaning that it's discretionary income only, and it's like you're not borrowing debt and going into debt and margin call to hodl, right? You're just buying the asset, Bitcoin, and you're never going to sell it. That's actually a great investment strategy. But then the question becomes like, well, what price are you buying it at then? You're buying at a low price or buying a high price? I mean, somebody could buy Bitcoin at 69,000 Bitcoin and hodl that forever, but you just kind of bought the relative top, right? Because where was the low? Pandemic, March 13, 2020. Let us never forget that day, that month from February 12, 2020 to March 12, 2020 was the craziest Bitcoin crash in a long time. In 30 days, Bitcoin crashed negative 50%. Not the craziest, that's an exaggeration, but it was volatile. So the second time that happened was May 6th to June 2021. That was also a negative 50%. We're at negative 37%. So how many days? This we could see another correlation here. This 82 days. This is a really long down trend. But are we going to hit our 50%? Maybe one more month and we'll see, right? So again, this is educational only, everybody. This is not financial advice to tell you what to do tomorrow on your investment. But I'm just being honest with you right now, is I usually never hear anybody talking about risk management, position sizing, stop loss, and your investing style, your trading or investing style. You have to know yourself. You actually have to study yourself. That's what my mentors taught me, is manage yourself, know yourself. I know I am not a day trader. I know that now, right? I know that sometimes I'm not even a swing trader. I know that I'm not a hodler type, right? So I'm right in the middle. I'm swing trader, investor type. But some assets, I don't want to hold it forever, right? Because like crypto, some of them you actually don't want to hold it forever because it's going to fail someday. Some of these altcoins, not all the altcoins are going to survive, right? So you don't want to hodl every single altcoin out there, right? So again, I hope this helps somebody out there who's watching. There's a lot of people watching right now. So again, on these streams on YouTube, like I almost hear nobody ever talks about this, but this is the like second most important skill, maybe the first most important skill of being a trader investor. The technical analysis, the price, volume, the tools, the indicators, that's a different skill. Charting is a different skill. Trading and investing is actually a different skill in itself, right? So let's just leave it here. Okay, this is a lot of food for thought for some people to think about. A lot of information here, but some people pay $1,000 to $10,000, $1,000, $5,000 just to learn this at a seminar, and you got it for free right now for today. Okay, so I hope this really, really helps you. Okay, and we're in a new year here at 2022. All right, and even for me, I'm trying to stick to this as close as I can. Discipline trading and investing, knowing exactly what is it that you're doing in the market, and execute it well. Right? Okay. Oh, we have one request. Sorry, I didn't see that one. AVAX. Let's end here on AVAX. Okay, AVAX. So AVAX is a altcoin. Maybe I'll bring up the bind. Well, I like this UOB chart. Why? Because it's showing us higher high, higher low trend pattern, right? High, low, high. Now, if it's going to be textbook, we might see a higher low. If it's going to be textbook, okay? So we could Fibonacci this thing. Where could it go? Could go to $58, $35, and $25, with support at $73. All right, I would also recommend put your trend line here at the bottom, put your trend line at the top, box this thing in so you have some kind of idea of what might happen. So if we look at it like this, with trend lines only looking at price and it's consolidating flagging right now, this is a descending triangle pattern. Okay, so I'll be wary of that. You can measure the descending triangle pattern. I'll draw it here in the yellow. Like this. Right? That might be an overly exaggerated measurement, but I would not be surprised. It's about maybe 30% average. So if you lose the support, 30% would bring us back down to $55. And that is a really obvious horizontal support level in the blue here. Like that. Right? So if you're looking for value on AVAX, you need to know your deep support levels. Where are the deep support levels? That's our 618 as well. So $53, I would be eyeing that. If it ever hits this trend line here at the X marks the spot, that would be interesting on AVAX. Right here, you can see it. So maybe like $50 area, give or take. Okay. Would be an interesting spot for AVAX. But if you're a day trader, you can't just look at a daily chart. You gotta zoom in a little bit. If we're looking at H4, starting to downtrend, it's getting choppy. It's just consolidating here, so you could just play between the support and resistance of like a $96 and $80. Just play between there. It's consolidating, wavy pattern, just equilibrium. So if it's gonna bounce, okay, target's 105. It's gonna crash $78. 1 hour is oversold, so I wouldn't be surprised if this thing starts to gain a little bit of momentum in the next 24 hours for this day trader if you're trying to scalp this thing. But if you're trying to invest in it, it's not low price right now, so I'm not super excited about AVAX. Also, we know Bitcoin, because we talked about Bitcoin for like 20 minutes, is Bitcoin's not at a low price right now, so you just want to watch out for that. A question, trading view. How do I decide period for Fibonacci? I think you're asking me about like where to select the low and the high of Fibonacci. That is the subjective art of Fibonacci. But for me, because I like to look at longer term, is if you have like an IPO, just try to find the lowest low and then the highest high. That's the easiest way to do it. Or you could just do it by year. This just happens to be on AVAX. The bottom of AVAX on this chart is January 1st, 2021 right here. And then you just pick the highest high that I'm seeing on the chart. So the lowest low and the highest high. Because you could Fibonacci anywhere on the chart. Let's pick some random. Let's pick a random. What's volatile? Well, let's pick something we're looking at, like Bitcoin. How do you decide where to do Fibonacci? Just pick some random exchange so we get a clean. Okay. Is if you're an investor, you have to zoom out. Okay. Because the problem is if you Fibonacci on like a 1 minute, it's weak Fibonacci. So you have to understand the concept of support and resistance first, and then understand that longer term time frames, the support and resistance is much, much more powerful, right? So if I switch to just to do it like on a daily chart, and then if you want like easy numbers, just do it by year, right? You can kind of see it. I like to spend a lot of time on the charts and just study it, right? Thank you so much, Taylor, for the 200 coins. Really appreciate it. Thank you so much for your support and watching and supporting and donating and joining and chatting every single time I stream. Thank you so much for the 200 coins. I really appreciate it. It definitely helps with the supporting the stream and getting the ideas flowing. And I wish I could buy coffee as well, because that would get more chart ideas flowing. But thank you so much. Really appreciate it. And I hope everything goes well for you in your trading and your life this month. Thank you so much. So right here, you just want to pick the lowest low and the highest high, right? But if you want a simple, just like day chart, and then do it by like year. If I have to just make it simple. But you can kind of see it too. It's like, well, the end of December 2018 is like somewhere here. And then there's this mountain peak here. And then this is our pandemic low. And then these two are close enough. So, you know, I would just Fibonacci. You could do this one. And then you could Fibonacci inside the Fibonacci if you want to get creative, short-term Fibonacci, right? It's just the lowest low to the highest high. The problem is when people Fibonacci like a 5-minute or 15-minute, it's too weak. The time frame's too weak. So stay on a day chart and try to find the lowest low and the highest high. And then you'll kind of see it like match up. Like for instance, if I do this one here, it's like, yeah, that sort of works. On the price, like, yeah, I could see that working. But what about this one down here? Okay, that one definitely is working because it touched this perfect spot right here. What if I try this? This one, that one also works, right? Just close enough, and okay, it works. So, you know, you kind of have to play around with it a little bit, and then once you find the spot, like, it'll just make perfect sense, because it's like, wait a second, this high is going exactly here, this low is exactly here, and then you could tell, like, okay, yeah, this is the one, this is what people are using, this one, from my experience, because it's like we're touching this 3 times, bouncing right off of this one, support this one, bouncing right off here, holding here, bouncing off here. So this is the one. Then I just lock that Fibonacci in, and then I use that. Alrighty, we went 30 minutes over, but I think it was worth it to get that maximum education in for this stream. Maybe my streams I might have to turn to 1.5 hour streams, because there's the educational part. But we'll stop here for today. It's kind of a semi-holiday for stock traders tonight. So thank you so much, everybody, for tuning in. I am streaming live on TradingView, YouTube, and Twitch. I have a free Discord group that's open to everybody right now. If you want to join, the social media links are in my profile. It depends on the asset. We have one last question. When I draw the Fibonacci, thank you so much, Spoopy Muddler. Really appreciate it. The 200 coins definitely helps with supporting the stream and getting the chart ideas flowing and getting this education out there to people who want to know about it. Just to answer your question, well, you're asking about the support and resistance. It's not, so the problem with Fibonacci is it's a mathematically calculated. Not everybody uses it. So there might be some regression tests or a back testing of that, if somebody might have done that, but it's more, Fibonacci to me is more of like an art than a science. It's there, so if it works, it kind of works, but you can kind of tell. Fibonacci kind of works better on cryptocurrency than on versus stocks. Stocks, because is more fundamental news based and stuff like that, where some of the technical tools does not really work well on stocks. But Fibonacci for cryptocurrency works pretty well. All right, so hope that answered your question for support and resistance. Thank you so much for tuning in. We'll definitely stop here. Hope you have a good week. See you next time, next Monday, USA time. Bye-bye.